All right, there we go. Cool. So I'm just going to start by doing a chart breakdown, which I always do like every Sunday. And we'll start off on, wait 1 second. Let me share my screen real quick. Okay. Can you guys see my screen? I hope so.
Yes.
Okay, dope. I'm drinking coffee, by the way, guys. I'm so tired, but I gotta put in the work. Okay. So first of all, we start off on GJ, just like always. We start off on the weekly time frame because I like to do my top-down analysis. So I do the weekly breakdown just to see where price is at right now and what we could expect for the upfollowing week. So when we're looking at GJ right now, we see that we had this big bullish impulse right here, and then we came down for a pullback. So when I'm looking at this right now, this still looks very bullish to me. Why? Because here we started shifting structure. We had a higher high, higher low, higher high, higher low, higher high. And now this could be our potential higher low zone where we could see some continuation into the bullish side of things. Especially if we look to the left, we see that this area right here has been a previous strong weekly resistance, which we are currently trading above and currently respecting, as this weekly candle rejected this support and respected. So seeing that on the weekly time frame, I'm also already very bullish biased. But then I go down into the daily time frame and I see, okay, what is price doing here? So looking at price action here, we see that on the daily time frame, price is in the form of a bearish counter trend. Why is that? So we had our higher high, higher low, higher high, higher low. Now here, this high didn't break this high, meaning that this turned into a lower high. And then this low got broken by this low, turning into a lower low, right? So on the daily time frame, we have switched into a bearish counter trend trade. So when I'm seeing this, what will I be waiting for to look for buys? Because the overall trend is also still very bullish, right? So in order to look for buys, what I would like to see here is for price to break above this previous support and resistance zone right here, close above on the 4-hour time frame, come down for a pullback, and then pull all the way up into this 4-hour support and resistance area right here. Now, when we're looking at the trend line and we are in a daily bearish trend, based on once price reaches this area right here, we could get another bearish impulse to the downside, or if it managed to break this trend line, then wait for a pullback to then look for continuation on buys. And now this would mean that for the overall week, we will be going bullish again. Now, if this scenario doesn't happen, because you always want to have like a scenario if it goes up, but you also want to have a scenario, what happens if it doesn't go up? What happens if it goes down? How will I react? And what will I be waiting for if that happens? So in this scenario right here, if we are staying below this resistance here, then we could see price coming back into this major daily support. Now, if this daily support, which has been respected here and in the previous area as well, but if this gets disrespected and broken, then we want to wait for a pullback to then look to take sales down here. Now, if we get this break here, then we could assume that for the rest of the week, we will be seeing bearish volume, which is why our overall BS should be switching to bearish. I hope that makes sense for you guys. But overall, I'm bullish on GJ, but we'll have to wait and see once the market opens what it wants to do. And then it's just basically react and adapt. But for me, I can take sales, I can take buys, I can react to the market, which I highly recommend to everybody. Is not being fixed on just one BS, not just like, oh, I only see buys, so I'm only going to wait for buys all week. Even though the market structure is shifting bearish, I will still be looking for buys and buys. No, you have to react and adapt and accept the fact that the market is always going to do what it wants to do. So then coming to this is EJ. Coming to GU right here. So on the weekly time frame, here we also start off. So looking at the weekly, we've had a strong resistance right here, which has been respected here. And the weekly actually closed in a strong bearish engulfing candle, rejecting this highs right here. So I could definitely see GU coming down a little more into this next weekly support and resistance area right here, which we can see if we look to the left right here and right here. So I could see a little more of a bearish push to the downside, but here we also need to keep in mind that we are in an overall bullish trend. Now here, the same thing again, higher high, higher low, higher high, potential higher low in this support and resistance area right here before we continue bullish. Now, if we should break this area right here and the next weekly candle closes below, well, guess what? We wait for a pullback the following days for it sells all the way down into this next weekly support and resistance zone. So going down into the daily time frame, what we can see here is also the rejection of this area. So what I also want to talk about today, of course, is candlesticks and their meaning, because every candlestick has its own story and it's trying to tell you a story, and you need to learn how to read that story. So if I come into the market and I see this right here, what is this telling me? This is telling me that time and time again, like basically 5 or 6 times, price tried to close above this resistance, and every time it got rejected, and then close below, close below, close below. So how many signs more do you need in order for price to tell you, yo, I'm about to go bearish? And what happened right here? We had this huge bearish breakout to the downside. And that was already like, I was anticipating this to happen, because I know and I understand that if price can't break a resistance, well, what's it going to do? It's going to come down again and find support in another area, which ultimately happened here. So we broke support right here on the daily time frame, closed below in a huge bearish engulfing candle, and now the next candle broke below as well. And now price is currently like floating in this area where we need to wait for price to either reach our resistance or our support. So ultimately, the daily or weekly resistance and support area will be here. So once price reaches here, okay, then we will look for potential buys or sells depending how it likes to react. Let's say we get a bullish engulfing on a 30-minute time frame based off this support here. Then we could take buys all the way back up into this next daily area here. What if it doesn't? What if it just breaks and disrespects? Well, guess what? We wait for a pullback, wait for an entry signal for a sell, and then take a sell down into the next area. And that's basically how I trade. It's just from zone to zone, right? So coming down into the 4-hour time frame, what can we see here? Let me zoom in on this. Let me delete this real quick. So price is currently at a 4-hour support zone right here. If you look to the left, we can see that it has been respected time and time again. So what are the scenarios that could play out here? Scenario number 1 is we break below, close below, come for a retest and go down into the weekly, which is what I'm guessing and anticipating. The next scenario would be that we respect this 4-hour support, which we've respected previous times again, and we push up bullish into this area here. So you could take potential buys based off this right here. Then the scenario once price reaches here is we can reject again and continue bearish, right? Or we can come back above, close back above the daily support and resistance zone, which we had here, wait for a pullback to then like to take buys into this area, or maybe even into the next weekly support and resistance area right here. That's basically how it works, right? From zone to zone. So for me, BS on GU overall is still, well, overall bullish, of course, but short-term bearish. So do keep in mind that we could see some continuation of the bearish movements. And now ultimately coming to gold, I will try to keep it short and crispy for you guys. So gold overall still bullish, as we can see, higher highs, higher lows as well. And at the same time, we do have like a strong rejection in this area right here. So as long as price maintains below this area, I will be concerned to continue to looking for buys. The overall best thing that could happen is for price to close back above our daily support and resistance zone, which we have right here. So we want price to close above, then wait for a pullback into here, wait if it can hold as a support, and then to take buys up into this area or continued buys to the upside. Now, if that should not happen, we should stick or stay below this area right here. I would ultimately wait, if we go down to the daily time, 4-hour time frame, I would wait for a break and retest here to the downside, to then to take sells based on this scenario right here, or the other scenario, like I said, break above, pullback, and then buys here. That's basically the scenarios that I see on gold right now. But on gold, I'm also overall short-term bearish, long-term bullish still. So also keep that in mind. I hope that you guys enjoyed the breakdown. Now we will be coming into the reason why you guys are here. Let me just take a sip of my coffee. So I did the questionnaire, and most of you guys voted that you're having difficulties with entry signals, or let's call it sniper entries, right? Or when should I enter? When should I not enter? Now, the first thing that you should know is what patterns will you be waiting for price to form, and on what time frame. And if price gives you those patterns, then you need to be able to react and enter on the trade once it gives it to you, right? So I have a few candlestick patterns right here that work for me perfectly. So let me share this. Most of you will already know the basics, but I will tell you why the basics are so important and why everybody uses them and should. So the first two entry signals that I have is the bearish and bullish engulfing. It's a classic, but it's a very, very strong candle entry signal for you. So for me, I'm a day trader, right? So I take my entries based on the 30-minute and 50-minute time frame. So if I get a bullish or a bearish engulfing on a 30 or 50-minute time frame, and most important thing is where it's printed, if it's printed at a resistance that I've marked off before or at a support that I've marked off before, that's a high confluence for me to enter on the trade. So a bearish and bullish engulfing basically looks like this, right? So the bearish engulfing, the candle looks bigger than the previous one, and a bullish engulfing the same thing. Then here, another great entry signal for me is the evening star pattern and a morning star pattern. Very strong entry signals, guys. If you see this on a 30-minute, 50-minute time frame, on a resistance or on a support, you best believe that price has a very high probability of going into that direction. So if you see an evening star pattern at a major resistance during your session, make sure you enter on that trade, guys. It's not always going to work out because that's how the market works. It's not 100% guaranteed, but it's a very strong entry signal. And it basically consists of, so the evening star consists of a bullish candle, a doji candle, meaning an indecision candle, which also indicates loss of volume and that the market is undecisive in that area. It's also important to know what that means, how they look. And then a bearish, bigger candle, which shows the overall direction where the market now wants to go. And now the same thing on the morning star pattern. We have a bearish candle, we have loss of momentum, we have a doji, and then we have a strong bullish engulfing candle, which indicates that the price will now go up. Now we're here. Another great entry signal, which is a aggressive entry signal, and I will go into that as well to explain what that means, is a rejection candle. So whenever price tries to break above a resistance, but it doesn't close above, it just closed under back again, leaving a big wick to the upside. That is also indicating to you, okay, price tried to break up, but the sellers came into the market and pushed price all the way back down, meaning that right now the sellers are in control, and we should consider entering on a sell into that position once we see one of those candlesticks formed. Now, on the other hand, on the right side, we see that price came all the way back down. So the bears pushed price down, right? And then the bulls came back up and pushed price back above support again. And we closed above support, indicating to us that the buyers are in control. We should consider entering on buys in this scenario right here. And I think that's, wait, let me check. Yeah, then here also, what I wanted to show you guys is that we also can have a form of a fake out, right? So this basically is when we have a resistance and price breaks above with a strong candle. That's why it's so important to be like patient, because we don't want to enter right away once the candle breaks. We want to stay patient and see how the next candle closes. If the next candle closes above support, okay, yeah, we could take buys. But if it closes back under, engulfing the previous candle, which we can see here on the left, which is a strong bearish engulfing candle, that means that this was a form of a fake out, meaning that the buyers just got faked out, the sellers just got faked out, and now we need to wait for a pullback into that resistance to then look to take sales down. So that's another entry area or entry, candlestick entry formation that you could look for. Another one, like I showed before on GU, is when we have a lot of wicks to the upside or to the downside and price is just rejecting. Price is literally telling you that they don't have, or it doesn't have enough strength to break above. So we could consider entering on sales in this area here as well. And then the last one, which I have, is the bearish variation, which I actually adapted from Lambo Raul as well, because he also uses this setup here as well, which is basically a bullish candle at a resistance and then two bearish candles followed in a row. And there are like high probability entry signals and medium probability entry signals, which I will go over as well right away. This will be considered a medium probability because the bearish candles don't engulf the previous bullish candle, but at the same time, based on this bearish candles, we could expect some bearish volume as well. So I hope you guys have been following so far. Let me check the comments. Is the middle one not liquidity when price take that liquidity? You mean this, the middle one, or I don't know what you mean, bro. But yeah, it's like basically like a liquidity grab, yeah. Yeah, there are different types of variation patterns. There are like, yeah, if you could also, of course, wait for 3 candles, but that's also what I'm going to go over right now on why you could wait for 3, but why you could also just enter based on 2. But these are more like aggressive entry signals right here. The more conservative ones will be these ones. So bullish, bearish engulfing, and morning and evening star pattern. Those are also the main ones that I go for when I look to take an entry, but the market is not always going to give me that. So if the market doesn't give me one of these two, then I will go to this and to consider looking for this. But this doesn't happen as often for me as an entry, if that makes sense. But what I wanted to go over right now is basically medium and high probability entry signals and why it's so important to know the difference, right? So I hope you guys can see this. Let me try to put this in full. Okay, so I hope you guys see this here as well. So I basically did this thing, right? I made screenshots of my charts to show what I would consider a bullish engulfing medium probability candle and what I would consider a bullish engulfing high probability candle, because there are always medium and high probability entry signals, and it's good to know that that exists, right? So here we have, for example, a bullish engulfing medium probability candle. Now, why is this medium probability? Because we can see the previous bearish candle had a huge wick to the upside, huge wick to the downside. And now this candle is basically engulfing, if you're only considering to look at the bodies, right? It's engulfing the previous candle, but it's not engulfing the wicks from the previous candle. So when we see this, you already need to keep in mind, okay, this is a medium probability entry signal. So maybe I should be a little more cautious with the percentage that I'm about to risk on this trade. Now, on the other hand, if we see a candle that looks like this, so we have this bearish candle, the next bullish engulfing candle, which engulfs and the body closes above the wick from the bearish candle. Now, this is an indication that this is a high probability entry signal on which we could consider and risking a little more on that trade. Then going down, bearish engulfing, pretty much the same. Not much to explain about it. It's just the other way around. So we have bullish body, bearish engulfing, but it doesn't close below the wick. And now here we have a smaller candle and a huge bearish engulfing candle, which obviously closed below the wick. Now, the same thing applied to morning star patterns, right? We have a medium probability, we have a bearish candle, we have a doji, and then we have this bullish candle. But this bullish candle didn't close above the previous bearish candle right here, indicating to us that it's a medium probability. But also, just because it's medium probability doesn't mean that you should not consider entering, because most of the times it will still like work out, but you do need to adjust your risk accordingly. But then here we have the Morningstar high probability, meaning bearish candle, beautiful doji and rejection candle, and the next bullish engulfing candle, which closed engulfing above this bearish candle right here, indicating to us that there's a lot of bullish volume coming into the market from which we could consider take advantage of. Now, same thing here, evening star pattern, right? So we have bullish, doji, bearish. And as you can see here, the bearish candle did not engulf this bullish candle right here. So it's automatically a medium probability. And if we look at the next candle, even if we wouldn't see it, we see that after that, we had like a bullish push as well. And that's because this wasn't a strong entry signal overall. And now here, high probability, bullish, a form of a doji or rejection candle, and then a strong rejection candle. Now, overall, this rejection candle is very, very strong. So if you see the composition, of these three candlesticks, high probability, especially if it's on a resistance that you've marked off before, high probability to enter on that trade. Now we continue lower, which is the rejection candles overall. So a medium probability rejection candle is basically when the body is at the middle of the overall candlestick and overall the wick. So we see that price came all the way back down to here, but managed to close in the middle of this wick, leaving a middle wick to the downside. And here we can see the same thing. So if this happens on a support, you could consider entering on a buy position, but you could also just stay a little more patient and wait for another entry signal for you to be like more secure on the secure side to enter on a high probability trade. And now here, rejection candle, high probability. I mean, this one is a huge wick to the upside, rejecting resistance, closing in a very small percentage of the overall candle body. And if you see that, that's also a high probability entry signal for you to take that trade, especially if that's on a 30-minute time frame, 1 hour time frame or higher. That's even better, right? And then the next one, I mean, not much to talk about. This candlestick formation right here, this form of a rejection candle happens very rarely. But if it does, most of the times, like 90% of the time, the price will continue, in this example, into the bullish direction. And that's because this candlestick is very rare. But if you see like this, like literally just like a line and a bottom wick, best believe it's going to go up. And in the other way around as well. Then here, coming to the bullish variation pattern. So basically what we already talked about is a bearish candle and two bullish candles, but it's medium probability because this bullish candle does not engulf overall this bearish candle right here. So if you see this, this could be considered a aggressive entry, which you should only risk not much. And then here we have a high probability, meaning that these two bullish candles automatically engulf this one right here. Now here we could also say, okay, but isn't that only a bullish engulfing if you only consider these two right here? And that's correct. It is an overall only bullish engulfing candle, but some people need a little more of a confluence or a little more of a reason to enter on trades, which is what I will talk about right away, between aggressive and conservative entries. So a conservative trader would wait for the next candlestick to form, and then that person would enter here. And there's like pros and cons to that, which I will go over right away. And then here we have the same scenario, but bearish variation patterns, right? So bullish candle, two bearish candles that don't engulf the previous bullish candle. And then here the other way around, which shows a lot of strong bearish volume. And that's basically what I wanted to go over according to the bearish variation patterns and overall the candlestick patterns for you guys. Let me check those. Yeah, so the rejection of various candles is basically, yeah, it's basically like a liquidity grab. Like price is just trying to grab above, break above, but rejecting. So that's a good sign for you to enter for sales if it happens on a resistance. All right, so now we want to come to aggressive and conservative entries. And for that, I will go back into the charts. So it's good to know that there are like two types of entry signals, right? Let me write this down. So we have aggressive, and then we have conservative. And what is the main difference? So aggressive entry would mainly be considered rejection candles, which we also went over, or medium probabilities candlestick formation, which we also just went over. So if we're looking at an example for aggressive rejection candles, and we're looking to take an entry based off a rejection candle, let me see if I can find one real quick. Just give me a second. Where's a good example? Okay, so let's say we'll take this one right here, right? So this doji candle, which is also considered a rejection candle. Now this would be considered an aggressive entry signal. Why is that? Because it's only one candlestick that tried to close above resistance, but close back under. If we just move this zone a little up to here. So it tried to close above, close back under, rejecting the upside and showing a little loss of volume. So an aggressive trader would enter here into a short position, will place their stop loss above the wick, and then they take profit, let's say down into the next support and resistance area right here. Let's say a 3-to-1 risk to reward ratio right here. Okay. So that would be the aggressive entry or the aggressive trader. So this aggressive trader would have made, he would have risked 1% and he would have made potential 3%, which is great. But what about if you want to wait and you're more conservative? If you're a conservative entry or a conservative trader, you would have to wait for this bearish candle to close in the form of an evening star pattern, and then you will take your trade based on that. But as you can see, what happens to your risk to reward ratio? It went down and you're not even at a 1-to-1, you're at a 1 to 0.6. So you're risking 1% to make 0.6%, which in this scenario doesn't make any sense. So here you have to tell yourself, okay, would I be more of an aggressive trader and enter here and make my potential 3-to-1 risk to reward ratio? Or would I consider myself more of a patient trader and a conservative trader? Or would I enter on this scenario here? And now the pros of being a conservative trader is if you wait for a good setup like this to play out or a good entry signal, there is a high probability that the trade will go into your direction overall. So that means that your win rate will increase, but what will decrease is your risk to reward ratio. And on the other hand, if you're an aggressive trader and you enter here and you enter right based on one rejection candle, there's a very high probability that you will get stopped out again, and maybe again, and maybe again, before the trade then goes into your direction. That means that if you're an aggressive trader, your win rate will decrease, but your risk to reward ratio, as you can see here, we have a 3-to-1 risk to reward ratio, which is great, will increase. So that's also an important thing to ask yourself. Do you want to only take entries based on aggressive entries or based on conservative entries, or do it, for example, like I do it, I just mix both. Sometimes I do aggressive, sometimes I do conservative. And in that way, my win rate stays pretty good and my risk to reward ratio as well. So when I'm entering on a trade or considering an entry, for me, it's very important to always go for at least a 2-to-1 risk to reward ratio. So I always need at least this in my setup right here, a 2-to-1, for me to even consider entering on the trade. Now, if I don't get at least a 2-to-1, I'm not taking the trade. I'm going to wait. I'm going to wait for another setup to play out, or I'm just going to come back tomorrow and then see if I can have a trade there. But that's it. And that's part of my trading rules, which I also want to go over, is for you guys to have trading rules, have a trading plan, and have a set like a playbook of setups that need to occur for you in order to enter on the trade. Now, if you have no idea what the fuck you're waiting for on the charts, if you don't have an idea what you're waiting for during your session or what entry signals you need in order to enter on the trade, then what are you doing? Like, those are like the basics that you need to get down before trying to get funded, before trying to become a profitable trader. You need to have a plan, which is why it's so important for you to know what candlestick formations do I need to see in order to enter, right? So another great example, I mean, let's look for something else. Let's look. Just give me a second for me to find something good where patience comes into play. Where's chat? Wait, guys, I'm looking for a specific setup that I think will help a lot of you guys. Wait. Yeah, but it's just taking forever. But yeah. So basically, like I said, aggressive rejection candles and medium candlestick formations, and conservative, we would have bullish, bearish, engulfing. If you're writing this along, that's great. I highly recommend to write along with this. And morning and evening star pattern. Now, keep in mind, I'm a day trader. So for me, I need that in a 15 or 30-minute time frame. If you would consider yourself a day trader or a swing trader, you could look for those setups on higher time frames. And if you consider yourself a scalper, then you could look for those setups on like a 5-minute or 1-minute time frame. That all depends on your strategy. But the candlesticks themselves and the formations of the candlesticks are not really going to change because they're all the same on all time frames, right? And now also another thing for you to know is the higher the time frame, the stronger the candlestick that is printed, right? So that's why I always start off on the weekly time frame. Let me go to GJ because that's my girl. So that's why I always start off on the weekly time frame, because the weekly time frame is mostly already going to tell you what to expect for the upfollowing week, which is crazy, right? So for example, here. So here we had all through here, we had a form of a support. Here we had it as a resistance through here. And then we had a break, and then we had a retest, and then we had a rejection. So if I see this rejection candle right here on the daily time frame, on the weekly time frame, sorry, what is this telling me? That there is a lot of selling pressure based on this area right here, and we could expect some bearish volume or momentum the following weeks. And look exactly what happened. After that, we even get a bearish engulfing candle, and then we got some bearish movements to the downside. What happens next? We get a rejection candles, or we get 2 rejection candles to the downside. Then we get a bullish engulfing on the weekly time frame. And what happens next? Guess what? Yeah, we push bullish. Let's go. And that's why it's so important to understand and to know the higher the time frame, the stronger the candle. Now, if we go to the daily time frame, what does the daily time frame tell us? Let's have a look. Bearish engulfing, guess what? 3 days after we were bearish. Bullish engulfing, guess what? 2 days after we were bullish. Bearish engulfing, guess what? Bearish. And that's just how it continues. And you just need to know that the higher the time frame, the stronger the candle. If you're in your session and the 4-hour candle closes, best believe that the 4-hour candle is going to tell you on which direction it might go in the next upfollowing 4 hours. So for example, here the same thing. Bullish engulfing, the next 4 hours, the next 8 hours, we had bullish volume into the upside. And then here we had a bearish engulfing and a rejection candle. and we went bearish. So that's also what I want to give you guys as well. Okay, so you guys want me to talk about liquidity. I went for the sweep from the previous session. Vertical on order block. Can still work. Enter on 1 minute or 5 minute. I mean, you can test out if these candlestick formations work for you. There are a lot of different trading styles, of course. And what I'm seeing right now, this sounds more like a smart money concept strategy. Now, my strategy overall consists of price action and entry signals or candlestick entry patterns that I need in order to enter. But I also do know that, of course, there's like liquidity grabs, liquidity swaps, BOSs, and stuff like that, which would go more into a smart money concept strategy, which is also great. Now, if you're trading smart money concepts, your entries are going to have to be very on point and very specific. So let's say you have like this support marked off right here, or this last low of the day, or how you want to call it. And then you're waiting for price to come back into this area to then take a aggressive entry based on that. You would have a sell limit right here, let's say here. And then your stop loss is gonna be, I don't know, maybe you have like a set amount of number, maybe 10 pips, 20 pips, whatever you want to have it. And then your TP into the next supplier demand zone, let's say here. Now, if price does this and it comes into your sell limit and triggers and goes down, then this will be considered a very aggressive entry because you never really waited for that entry signal in order to enter. So that's not really my trading style, but I do know that, of course, that can also be a profitable strategy. But for me, this would be just way too high risk. Why is that? Because it could trigger me in here. So my trade could be activated right here. But what can happen afterwards? Price can just stop the fuck out and then go my direction, maybe. Or price could just continue higher, because I never waited for price to tell me where it's going. So for me personally, I need to see. So if we go in a lower time frame, it might even give us an entry signal in this scenario, but a little later. So a smart money concept trader might have entered here, right once this got triggered. For me personally, as a price action trader, I would wait for this bearish variation pattern right here, and then I would enter. And as you can see, my risk to reward ratio went from a 4-to-1 as a aggressive entry to a 2-to-1, which I would ultimately also be fine with. So I hope that could kind of answer your question. But I'm not really into a lot of like liquidity stuff and SMC strategies. Yeah, ICT strategy. Yeah, I've heard great things about it. I've just personally never really looked into it. I mean, I've looked into it, but it's not really my style. And I've been trading price action since 3 years. So I'm not really looking to change because this is obviously working for me. So also, if you have like a strategy that works for you, make sure you stick with it and make sure you study every part of that strategy and just apply. Make mistakes, learn from them, but continue with the same strategy, because in the moment where you're going to start switching strategies, your whole learning process is just going to take way longer than it would if you would only stick with one. So of course, if you're just starting out and you're having like your test phase and you still don't know what strategy or what type of trader you are, you just feel free to try it all out. Like try out scalping, try out day trading, try out price action, try out SMC, try out whatever the fuck you want, but then sit down, review, and see what suits you the best, and then choose one and then stick with that. Just that's going to be a game changer. Do not continue switching. Oh no, I've not been profitable for 1 month with this strategy. I think this strategy is trash. I'm going to switch it out by another one. Oh, I'm trying this out. Oh, this is working good. 2 months. Oh, I'm profitable 2 months. In the 3rd month, I'm not profitable anymore. Nah, I'm gonna switch the strategy. No, guys, don't do that. Just stick to one. And every strategy has their good times and their bad times. That's part of trading. And I mean, I could even like talk from experience. I have had like months where I'm not profitable, let's say 1 month or 2 months, where I'm using the same strategy like all year, all these years, but sometimes there are months where I'm not profitable. And that's part of the strategy, because the market conditions are not always going to be the perfect market conditions for your strategy to work. So that's why you need to stick with one for at least a year to know how does your strategy work in January, February, March, April, etc. And then you can review your whole strategy and see, okay, is it actually profitable for me? And if not, after a year, if after a year you should see it's not working, maybe then you need to switch it up and change it again. But then your learning process will take a little longer, which is totally fine. which is part of the process, right? Would you say not to use indicators as confirmation because they lag? I tend to use only bullish engulfing as confirmation amongst the other mentioned rules. Yeah, so indicators for me personally, I started off with using, I don't know, like 6 indicators. My chart was fucking cluttered. I had Ichimoku cloud, I had EMA zone, I had RSI, I had trend lines all over the place, I had support and resistance, I had supply and demand zones. Like my chart looked so cluttered. But in the moment where I decided to remove indicators, because also a mentor that I had told me like, yo, you need to cut it down. Like no indicators at all, pure price action, maximum 1 indicator that you could use as extra confluence. And guys, let me tell you, once I started doing that, that's when I saw the ultimate level up. So if you're using a lot of indicators right now, and if they're working, props to you, go for it. But if you're feeling like when you look at the charts, you're kind of confused and you don't know what exactly to wait for, or you can't really read price action, just remove all of the indicators and take your trades only based off price action and support and resistance. And believe me, it's gonna change. So for me, the only indicator that I use is the 50 MA, and I only use it for overall direction, right? So whenever I turn it on and I see, okay, price is below the 50 MA, like here, for example, then I could consider entering on sales. You know what I mean? Then there's a higher probability that the sales will play out. And here, if price just broke above the 50 MA, well, yeah, then there's a high probability that we could see some bullish momentum, but this just as an extra confluence. But I don't only take my trades based on that, and I really don't use any more indicators than that. So I also recommend that to you. Just remove a few, focus on maximum 1 or none, and then try to first just read the price action. Same here. Yeah, man, we all started out like that, super cluttered chart, no idea where we're at. So support and resistance goes along with trend lines and price action, I guess, right? Yes. Support and resistance is basically market structure, right? Because price is always going to go. There are 3 forms in which price would like to move, right? So we have higher high, higher low, higher high, higher low, higher high, higher low. Yeah, that's bullish trend. So every time when price reaches an area where it cannot break above, this is considered a resistance. It's like a ceiling. And every time a price reaches an area where it can break under, it's considered a support. So due to market structure, price is automatically already giving you support and resistance zones. Now your job as a trader is just to actively know how to read them and how to spot them the best way, because every eye is going to see something different. So for me, due to experience and putting in a lot of work into the charts, for me, it's super easy to identify support and resistance. Whereas if you're a beginner trader and you're first starting out and looking at the charts, nothing makes sense. Of course it doesn't, because you need to put in the work. You need to learn how to read the market. So we have this market condition, which is bullish. Then we have lower low, lower high, lower low, lower high, lower low, which is obviously bearish. And then we have our third market condition, which is the consolidation range, where we have highs and lows all of the time without clear direction. So for me personally, just a little tip, if price is in this range right here, I'm not trading. Why should you be putting your money at risk, entering here on a buy, selling out here, buying here, selling, getting stopped out. Like, it doesn't make sense, right? We want to wait for the beautiful market condition to be formed, either higher highs and higher lows on an uptrend, or lower lows and lower highs on a downtrend, for us to put our money at risk in the first place. Yes, sir. Trend is your friend. That's exactly how it goes. Now, also, I think there were a lot of people that had like difficulties with spotting the overall trend, which I also had difficulties with when I started off with trading. So here I always recommend, if you are doubting, or if you don't know on what trend you are in right now, and let's say you're on a 50-minute time frame and you see it's bullish, then it's bearish, and it's bullish, and then it's consolidating. What the fuck is happening here? Zoom out. Go 4-hour time frame, go daily, go weekly, and see where you're at right now. And now if the weekly tells you this is fucking bullish, man, then you should consider only looking for buys. If the daily is telling you, oh, we are in a counter trend trade, or we are in a counter trend right now, because every time when we go up, price must come down and breathe before continuing the overall trend, well, then we know, okay, weekly bullish, daily bearish, 4-hour, if we go to the 4-hour, is bearish as well. So now we would have 2 time frames in sync, which would say, or which would mean that there's a high probability that we could continue with sales based on this resistance right here. But what happens if we break to the upside? Well, then automatically the daily time frame will also start shifting into a bullish trend back again. So then we have daily bullish, weekly bullish, 4-hour bullish, more probabilities for you to look for buys, if that makes sense. Yeah, I think that's pretty much everything I wanted to go over with you guys. Yeah, just the 2 tips. So the higher the time frame, the stronger the candlestick formation. Remember that. And also the candlestick formations will always happen, right? But also remember that they only matter if they're in an area of interest that you've marked off before. So if you see a bullish engulfing on a support, on a daily support, 4-hour or weekly, then that candle has more power than a bullish engulfing in the middle of the chart. So let's say you have a bullish engulfing somewhere here. That doesn't matter. Your bullish engulfing should only matter in this area here or in this area here, right? Because it's a support. Same thing with, let's say, evening star patterns. Like if we go down into the lower time frames, you will notice that we get, for example, this bearish engulfing candle here. Now, only because you see this in the middle of the chart, that doesn't mean, oh, no, we're gonna sell now. I need to enter here. I need to place my stop loss here. I'm gonna take profit down to here. No, guys, just because this is happening in the middle of the chart, you should ignore this. You should only care about this because it's your support. And if we go higher, you should only care about this because this is your resistance. So anything that happens in between, guys, don't go crazy. Ignore this shit right here. Ignore this noise and just focus on what's actually happening. And if we look now, here we actually had about 3 entry signals that were telling us that we could go bullish from this moment on. So the first entry signal we had, of course, is this huge rejection candle right here, right? Huge wick to the upside, to the downside, and then closing bullish above after a doji, strong indication. Second one, bullish engulfing. In case you missed the first one, here we go again. Bullish engulfing candle on a 15-minute time frame. Oh, in case you missed that one, guess what? We come back down, we give you a morning star pattern on a 15-minute time frame. I mean, if you missed that one, man, the last chance you're getting right here, which is another rejection candle after bullish variation. So you could consider entering right here. And that's basically how it works, right? Everything that happens here, relevant. Anything that happens in between, not relevant. Yeah. Do you guys only still have like a few questions? Then you can hit me up right now. Do I still have coffee? Ooh, I do. You could ask anything if you want to. Okay, if you guys don't have any questions, then I would say I'll end this free webinar here. I hope you guys really enjoyed this and could take some value from it. Wait, you got something here? Yeah, no problem. I love to help people, guys. Like, if you need my help with something else or with trading in general, feel free to hit me up with a DM on my Instagram. My Instagram is _EvanSean_. Anything else is fake account, so don't fall for that. I will not write you at first. You can write me, I'll answer. That's gonna be the real me. Anything else is fake, guys, so watch out for that. Don't get scammed. And besides that, you can also feel free to join the signals chat, guys. We're going crazy. We're already up 11% in the matter of 2 weeks. So imagine you started like a funding challenge. You would have already passed it with our signals, but it's not just signals, it's a learn and earn as well. So you will, besides using our signals and making money with us at the same time, you're also learning my perspective on the market, why I entered here, why we got stepped out, what we can learn from this and that. So I really encourage you guys, like if you want to level up your trading, feel free to join the signals learn and earn chat. I would really be happy to welcome you guys and help you out there as well. So you can join if you feel like it. If not, or if you're looking for a one-on-one mentorship, you can also just hit me up per Instagram and just send me a DM. I'll be happy, really happy to help. For me, as you know, the first thing for me is to help everybody level up their trading and level up in life in general. So yeah, what about the Fibonacci, man? So Fibonacci, on how I set it up, let me send my IG handle here. There you go. That's my IG. All right. Yeah, so Fibonacci, if you want to know about my Fibonacci setup and how to use it, you can also check out my TikTok if you haven't already. Where I basically have a whole TikTok on how to set up the Fibonacci with all of these indicators right here, like the numbers and stuff. That's how I set it up, how I use it. And yeah, Fibonacci, I basically also use it as an extra confluence for my entries. So for me, like confluences are interesting. So bullish, bearish, engulfing. Are we at a support or at a resistance? In what kind of trend are we? Are we bullish? Are we bearish? And depending on that, that's also a type of my confluence. Are we rejecting a resistance? Are we rejecting a support? Did we have a break and retest? Is it a Fibonacci level? Is price above or below the 50 EMA? Now, those are all things that come into my confluences. And the more confluences I have, the higher the probability that the trade is going to play out in my favor. And I only trade with probability. So if the probability is low and I only have like two confluences, let's say the first confluence is a bearish engulfing and the second one is we're at a resistance, but the overall trend is bullish, 4 hours bullish, daily bullish, blah, blah. There's no Fibonacci play, etc. Then for me, that will be a low probability trade, which I will not consider entering in the first place, because as a trader, your first rule should be to preserve your capital and not put your money at risk unnecessarily for trades that aren't worth taking. Yeah. Also, like if you're struggling with psychology, guys, because psychology is everything in trading, right? So if you're struggling with psychology, make sure you have a trading plan. I really encourage you to have one. So your trading plan should include your strategy, and the most important thing is your rules. So for example, my trading plan says I can only have 2 trades per day. If I reach that limit, I'm done trading for the day. And it's important for you to set rules and set limits, because otherwise you're going to start over leveraging, you're going to start over trading, and you're going to start losing more money than you anticipated. And you don't want to end up in that cycle. So make sure you have a plan. 2 trades a day for me. If I lose the first one, I could consider entering again. If I win the first one, guess what? I'm done for the day as well, because I don't want to be too euphoric and then re-enter and try to make more money, and then I just blow up the whole profit that I made before. No, that's why you need to have rules. And now not only have them, but also respect them and obey by them, because they're there for a reason. So what the fuck? What is that? Yeah, my TikTok, exactly. That's Evan Sean FX. There's also a lot of fake accounts out there. And yeah, read the book Mark Douglas, Trading in the Zone. That's a great, great book. So I highly recommend everybody to read that as well. Which also helped me level up as well. Yeah. I can't mute that person. I don't know how. Oh wait, here. How can I mute him? There you go. Okay. Yeah. So psychology wise, yeah, that's basically what I wanted to give you guys as well. Have a trading plan, follow your rules, and if you break your rules, make sure you reflect on them and you learn why did you break them and how can you improve next time to avoid them. Because only in the moment where you look at yourself in the mirror and you accept that you made a mistake and you accept to not repeat the mistake, that's when you're also going to see the level up in your trading. Now, every time when you try to ignore your mistakes, let's say you just entered on a trade because you had FOMO and you didn't want to miss out on the move, and it stops you out and you're just like, shit, I just lost money. I just lost the trade, but you know, it's whatever. Put it to the side, re-enter again. Maybe I can make back my money. Oh shit, I just lost more. Oh, shit happens. I enter again. So in order to avoid that, guys, have a plan, reflect your emotions, learn to know yourself and your emotions, and just try to improve every day. And not just in trading, but improve in your life as well. Try to become a disciplined person. Try to wake up early, try to take cold showers, try to meditate or pray, because that really helps, guys. It really helps. Try to manifest the life that you want. That was literally a level up for me as well when I started doing that. Be grateful, like practice gratitude for everything that you have in your life and everything that is about to come in your life as well. Work out, guys, stay healthy, eat healthy, because it all comes down into a huge bubble of positivity, and you just take that bubble of positivity and put that into your trading, and there's no other way than to succeed in trading, because everything else needs to be in balance as well. You can't be like drinking alcohol, smoking all of the time, going out partying on weekends, not studying, not putting in the work in the charts, but then come to the charts and expect money. Like how is that supposed to work? You know what I mean? So make sure you're healthy in your overall life, in your overall lifestyle, and then project that into the charts. And if you have, let's say you have private issues with your partner, with your family, and you're feeling bad, you're feeling like shit, don't go to the charts, guys. Don't trade. If you're feeling like shit, don't trade, because trading is a mirror of yourself, and you're going to start reflecting. If you're feeling like shit, you're going to reflect it into the charts, and your trades are going to go like shit. And you don't want that. You want to feel great. So you want to come with energy. You want to come with a positive attitude into the charts. And then believe me, it's going to reflect in the charts, and you're going to see big, big improvements. So also focus on that, guys. And with that being said, that was a lot of sauce I just dropped for you guys. I hope you enjoyed this. So great. Yeah, all right, guys. I hope you enjoy the rest of your evening or morning, whatever it is where you're at. Like I said, feel free to hit me up on Instagram if you're interested in mentorship. Make sure to join the Signals Learn and Earn Check, because we're about to go crazy. Yeah, guys, appreciate your attention as well. Yeah, I'll drop the Telegram chart breakdown there for sure. Peace out, guys. Thanks for the love, guys. Appreciate it. Peace.